as anemic at best following their listing. All three companies are now trading below their market price. Has there really been a change of heart on Chinese IPOs, and why? Let's talk to Philip Chan. He's Research Director at Shenwan Securities, one of our regulars here on Squawk Box. Philip, nice to see you again. Welcome to the program. Somewhere towards November, I remember talking to a guest about Chinese IPOs, and he very quickly said, all the good ones are already out there. Don't bother with anything else in the pipeline. Is that a bit harsh?
Probably a little bit harsh, I think. You know, because basically there's quite a few slated for this year still. We've had quite a few already in the first few months, but you know, we've got Ping An Insurance coming up, and you know, a couple of the banks in China, one of the major ones. Slated for later this year, so that's only been what's been sort of said openly. There may be others coming. I think it's a bit early to say that all the best ones have come, and in any case, you look at all of these as I always say, that on an individual basis, you can't sort of just jump on a bandwagon and you know, apply for all the new issues.
So investors who want to get into China-based assets and get into the China story need to, from what you are saying, be really careful and look through each individual IPO, research the company very well. Can we say that there are certain sectors, perhaps, where IPOs are in the pipeline, which are safer than others?
There are no particular, you can't really sort of say safe sectors either. The reason why is because you can't guarantee the aftermarket, I mean the secondary market activity of the stock. A lot of, whilst the conditions leading up to the actual IPO may look favourable, you know, liquidity looks strong, and demand looks strong, and the take-up is good as well. On the actual day, there could be, when it lists, and thereafterwards, there could be other factors in the market which have no real bearing on, say, the company, or as you pointed out before, the retail money is now turning cold on these new issues. So,
Philip, I wanted to ask you a little bit about that, about how the heat has actually turned cold on these issues. We have two that are going to be start trading today. One is Hong Kong Lifestyle International Holdings, also China Resources People's Telephone. And in terms of in terms of People's Telephone, it was priced at the bottom of the range. The retail portion had to be cut in half.
Yes.
Is this specific to the company, or is it indicative of a larger trend?
No, I think it's a mixture. There's you know, at this moment the timing is not that great for a new IPO. I think also it's just more indicative of the company itself. Maybe it's just not attractive enough. Yeah.
Can you talk a little bit more about Lifestyle and whether or not you think this would be a good company? It's a department store operator.
It's a little bit hard to say at this moment because, you know, they're injecting these assets in Shanghai, but the actual department store in Causeway Bay looks attractive. I mean, in terms of an asset, operating asset. Whether it's going to, I think people obviously are going to buy this on as a retail play obviously in Hong Kong, Shanghai. It's being priced at you know, I think at the top end. So I think it's got a reasonable chance of getting off okay. Like I said, at this moment in time, the sentiment is just cooled off, but it's still there. I mean, the demand for Chinese IPOs is still there.
And the final question I have for you, Philip, is who's buying? Because as we see, Wall Street has soured on Chinese IPOs. It's the fact that there's discrepancy between what Wall Street considers adequate or suitable governance and what Chinese companies are actually able to deliver. So might we see a fall-off in demand from US-based investors, perhaps more Asian investors picking up the Chinese IPOs?
I think you're gonna have that problem anyway. You know, Chinese companies, the regulatory environment, the corporate governance has been getting better particularly over these last 3 years. However, I would say it's not across the board, and you're going to have phases where the foreign investors are going to come in and out of these issues, and even into the secondary market. So I think this is just a short-term phenomenon if they're going to pull out.
All right, we'll leave it there for now. Philip, thank you very much for your comments today. Philip Chan, Research Director at Shenwan Securities.